Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another edition of the Grain Feed brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from our amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm Jake Kingsley. Jim Matthews has been relieved of the Chicago winter and sent down for a trip to Florida. With me today, we have from Atlanta, Illinois, our Director of Buyer Relations, Verl Prather. And from way out east in North Carolina, we have our Grain Markets Intelligence Manager, Mike McGinnis. How are you this morning, gentlemen?
Doing well, Jake.
Doing well, Jake. Happy to be here.
I'm glad to have you both here. We need a little bit of stability in this show with first run hosting as Jim has made his way to the southeast. Well, Paige, let's go ahead and timestamp this broadcast. It is about 10:15 a.m. Central Time. Last time we'll do this show before we make the spring forward adjustment to our clocks on Sunday. Everybody but our friends in Arizona anyway. This morning, markets are up. Generally across the board, we have corn futures up about 1% to 1.5%, 4 to 6 cents, depending on the contract month there. Soybeans up about 1% all along the curve, up 9 to 12 cents. Soybean meal up $1 to $1.50 a ton, about 1/3 to 0.5%. Dairy markets are also trending just a little bit higher this morning. Crude oil, however, is down about 30 cents a barrel across most of the contracts there. Potentially a little bit of price movement and positioning ahead of tomorrow's March WASDE report, which, Mike, you're going to talk on that a little bit, what to expect ahead of the report, some of the things we may see out of South America, some demand expectations, and then also lead a little bit into a couple of important USDA updates we will see later in the month of March, I believe on Thursday the 28th, as markets and government offices will be closed on Friday the 29th for Good Friday ahead of the Easter weekend. So, Mike, what have you got for us today?
Well, Jake, I like to call this March Madness, and not the type that happens in the gyms around the country at this time of the year, but a lot of information, a lot of data as far as numbers coming out that the market can digest. And we'll start with the pre-report estimates for the USDA WASDE on Friday. And really, when you look at this report, you want to know if the USDA is going to use this report to lower the Brazilian soybean production number. They have been at 157 million tons for quite a while other groups continued to lower their estimates. You know, the USDA at some point, unless they want to really look different, so to speak, than everybody else, I think that they might use this report to do a little tweaking. So as you look at this, the report is going to have the ending stocks for US and world, and then, of course, world production numbers. A survey ahead of it is showing that analysts expect for ending stocks to come in around 2.15 billion bushels, and that would be just slightly under what USDA had in its previous estimate of 2.17. So still, it's very large. I've said before that the market doesn't start to rally or get nervous until we drop below 1 billion bushels, and we're talking about over 2 billion bushels right now. So there's a ton of pressure on the corn market, regardless of what they come out with on Friday with this report. Now, for the Brazilian soybean production number, again, mentioned that the USDA has been sticking at that 157 million tons number. The analysts think that the USDA might come in at 152, maybe 153, so dropping that number a little bit. That same survey of analysts is showing that the U.S. ending stocks, soybeans would be 319 million bushels, which would be slightly above the USDA's previous number. So that would be bearish if the USDA raises the ending stocks versus its last estimate. But I think, again, the whole focus of Friday's report will be Brazil's number and what it does also to Argentina's numbers as well. But the big effect will come from Brazil. Also, a survey ahead of this report for U.S. wheat ending stocks is unchanged. So we're expected to see very little in the way of wheat numbers.
Yeah, we'll see what the USDA comes out with on Friday morning here. Kind of interesting that analysts are anticipating little change or no change at all to Argentine numbers and maybe a slight reduction in Brazil, but I don't think they even catch up to what Conab had done last month. So thus far, the industry expecting something of a bearish report tomorrow anyway. We will see how that shakes out. I think something else we've been kind of keeping our eye on here, which I think affects the domestic balance sheets a little bit more than anything, has been export sales and particularly Chinese activity in that space. Anything you're seeing there, Mike?
Yeah, we do have some good news in that way with soybeans. We'll start with corn, though. The corn export sales for this week came in around the higher end of expectations at 1.1 million metric tons. And that was the higher end of the trade's range for old crop. However, there were no new crop sales, and so that was bearish for the corn market. And by the way, the big buyers for corn right now are Japan, Mexico, and Colombia. Soybeans, the sales for old crop came in today above the trade expectations. The new crop sales were also above. So we did see fresh activity in the export sales in soybeans this week. And some of the big buyers, namely China, also Germany and Indonesia. So we like to see China in there. And the industry is trying to convince China that we are the most secure supplier when Brazil is not able to supply soybeans to them. The industry is trying to real hard to try to get China's business back to a level that it was at one point in 2012 and 2013. Soy meal exports for this week for old crop were about the low end of expectations, but the story in the soy meal exports were the new crop sales. They were way above the expectations, coming in at 64,666. And for soybean meal, the big buyer of the new crop sales was Canada. Old crop, Colombia, Ireland, and Guatemala were in for some U.S. soybean meal this past week, but Canada was surprising with new crop soybean meal purchases. For wheat exports right now, for this week anyway, they came in the middle of the range of trade expectations. We do have the pace of export sales right now. For corn, U.S. exports are running 35% above last year's pace at this same time of the marketing season. And that percentage is also above the USDA's expectation of 26%. So US soybean season to date exports are down, though, 20% versus last year and down 12% from the USDA estimates. So net, I think the corn export sales pace is positive. Soybeans have some work to do.
Verl, are you seeing anything on the ground in the Midwest as far as cash values in response, either old crop or new crop, kind of in response to some of this export movement? I know we're early enough in the season that folks can still kind of make some adjustments on their planting intentions. We kind of feel like we've seen a pretty good slide in futures values that maybe is going to slow down the pace of sales both on grain coming out of the bins and anything that folks would have been doing on the new crop front. Are you seeing any changes or adjustments here ahead of WASDE and as we move into this big report month of March?
Yeah, so there's a couple of things to kind of look at as far as cash values across the Midwest currently. Right now, it doesn't appear that there's a whole lot of movement as related to exports specifically. We still have the upper Mississippi that's closed down for the winter season. We're looking to get some of those facilities back up and running here within the next couple of weeks as some of the lock and dam maintenance activities start to wrap up. Additionally, one thing though that we are seeing is pretty significant delays of rail traffic or rail freight of grain within the United States. As Mike mentioned, one of the biggest players in our corn markets this year as far as exports goes has been Mexico, and the bulk of corn going to Mexico is shipped by rail. Right. And right now, I mean, there's certainly delays that are taking place at the U.S. and Mexican border, and it seems likely that it's all based on just sheer volume of corn trying to move that direction. So overall, it's a good thing, right? But when these Midwest elevators are expecting rail cars to show up at a certain time frame and they don't, right? It can cause some pressure on basis values back to the producers in the area. And we are seeing some of that, especially this last week, because on top of those reasons, we also saw the BNSF have to halt operations due to the wildfires in the panhandle. And folks that were expecting shuttles on the BNSF have been delayed up to a week or more. We're still seeing very strong ethanol demand. We've got strong crush demand for soybeans. There was actually some concern at the beginning of the week. There was news of a biodiesel plant idling its refinery operations in Ralston, Iowa. And producers in that area were pretty concerned as to what was going to happen with the crush facility right next door to the plant. And talking to a lot of originators in the area, it seems like we should expect very little direct effect on cash prices due to that biorefinery closing down. So that's definitely the good news there for producers in the area. And then also those that rely upon that soybean meal coming out of that plant.
Yeah, that's kind of interesting. We'll do a little digging to figure out where that idling is going to impact. It has to hit someone somewhere, but it's good to know that the local market there should be able to carry on in a mostly normal cadence. Been a little bit of a hectic spring here, I think, with all the price movement and now some logistic issues that we've been dealing with. I think a lot of folks are trying to make decisions here as they get into planting, and our producers on the livestock and dairy side trying to figure out what do they do with feed prices over the next 6 months as we come into the second half of the feed year. Basis numbers kind of jumping around, at least in the short term, with these rail logistics being the big hang up. Hopefully that works itself out kind of naturally over the course of the next week or two. We get some of these wildfires under control, some of the bottlenecks at the border kind of cleared out, and can kind of get things back to normal, especially as it seems like there's a lot of grain still in the bins in the Midwest. It's going to have to move ahead of harvest. Last thing we need is to already have a backlog and then slam the market with an excess of product. So kind of looking forward towards the end of the month here, Mike, we've got the prospective plantings report as well as the quarterly stocks report out there that'll kind of give us an idea of what kind of grain is left in the bins and what the U.S. farmer is thinking going into the plantings window this spring. Any insight into what we're expecting from those reports this early on?
Yeah, we'll start with the prospective plantings report. The last real signal that we had from the USDA came at the USDA Ag Outlook Forum in February when they released their expectations or forecast of 91 million corn acres and 87 million soybean acres. That might be right about where things land. There's still talk that the economics, the soybean to corn ratio, is showing that it is more economical to plant soybeans. So we'll see if we do get that expectation of an extra 3 to 4 million acres. I know that there have been some farmers voicing concern about the economics of farming and profitability right now. So they may lean toward planting more soybeans. I think what it's going to come down to, Jake, is April's weather and the early part of May's weather. And so if the farmers are squeezed to get this crop in because of some tough inclement weather, then I think that you might see more soybeans being planted. But if it's favorable planting weather in April and the first part of May, then I think you'll see the corn acres compete just as well for soybeans. Now, we've talked before about these 3 to 4 million acres of soybeans coming from fringe states, and it's really not that hard to find those fringe states that could bring up that soybean number. So we'll see also if the fringe states, what kind of weather that they have. Some of this warmer than normal weather in the Midwest and in the South right now is coaxing maybe some farmers to want to get out there and do their field work earlier than normal, which also allows them to plant earlier than normal. So if they get the planter out there and get it rolling, weather is favorable, I think they stay out there and plant. And so whatever it is that they're planting at the time, they just keep planting more of it. Most of the time, that's going to be corn to start with. So again, that prospective planting report will be out on the 28th. It's also the same day of the quarterly grain stocks report.
All right. That'll be a pretty big day heading into a 3-day weekend there for the markets. I expect we'll have probably a fair little bit of volatility leading up to it and potentially coming off of the weekend there the Monday following. Anything in particular you're hearing or anticipating for that quarterly stocks report? We continue to talk on the feed front about being patient in the cash market because there's a lot of grain still in the farmer bin in the Midwest. And at some point, we believe that has to come to market and likely help soften basis for our feed buyers. Any indication of what's going on there and what that quarterly stocks report might enlighten us on the feed front?
Well, to follow up to your comment, I agree with you. I think that's good advice. I think it's really tough for these markets to be able to move. When you talk about the quarterly grain stocks report, first off, the quarterly grain stocks is stocks as of March 1st. So they would have done that survey in late February. So it's really kind of a lagging report, so to speak, because we're really talking about not stuff that farmers would move this month. It's backward looking, in my opinion. So, in other words, if farmers decide this month or even after Friday's WASDE report to say, well, maybe I should move some stuff before I get into the field, well, then they move that crop out of the bin. It's not really reflected in that quarterly grain stocks report. That's the point I'm trying to make. So we'll see, but we really haven't seen much of a tick up on farmer sales because they are holding out for some last minute Hail Mary rally.
Yeah, Verl, you haven't seen anything different on your front there. I mean, we had a nice little pop in futures to try to encourage them to move something, but then at the exact same time, we have this depression in basis due to these rail issues we're talking about. So, any real change in the cadence of farmers moving grain out of the bins here in the last handful of weeks?
Yeah, so comments from grain buyers towards the end of February would indicate that there were some cash sales or some pricings being made by producers for deliveries during that time frame, and mostly due to cash flow purposes, right? I mean, March 1st, rents came due, and so folks were kind of preparing for that out of cash. Additionally, it has been quiet since then from the sounds of things. Although today, with the little bit of pop that we're seeing in the cash markets due to futures, and also some of these ethanol plants west of the Mississippi are still playing their book pretty hand to mouth. And so we continue to see them get into some pinches now and again to where they have to bid up to get some corn flowing in. And that's exactly what we're seeing today. We've got cash corn above 450 again in some areas, and it's starting to move some bushels.
Well, thank you for that, Verl, and we appreciate all of your insights into this handful of reports as well, Mike. That will do it for this episode. We'd like to thank the EverAg Insights team for their support. We'd like to thank you, the viewers, for watching. Thank you, Paige and Lexi, for your production magic. Contact information, as always, is on the screen, and we greatly appreciate your feedback, as Jim would say. We'll catch you next time on another edition of the Grain Feed.